In this episode of Reset Diaries, we have an amazing guest, Pranay Pankaj. He's based out of Singapore and he shares his journey from civil engineering to software engineering and eventually to managing an investment fund. He opens up about the challenges of switching careers, starting his fund, and landing his first clients, all while staying true to his values. We candidly discuss the skills needed for trading and the rewarding lifestyle he enjoys now as a stay at home dad. If you are curious about fund management, then this conversation is for you. Welcome, Pranay, to Reset Diaries.
Thank you, Astha, for this generous introduction. So I believe I should be able to share my experiences and hope your audiences will like it. Yeah.
I'm very confident about it. So, Pranay, can share a little bit about your background and then what were you doing before you made this pivot?
It's been almost 21 years. So by education, I was a civil engineer. I spent my 4 years doing civil engineering, and I got a job in a largest construction company. It was a aha moment for me because at that point in time, most of the jobs were IT based or software development based. But I got a job in a construction company, and it was of my liking because I thought that I could exploit or use my skills which I had learned for 4 years. Like so, academically, I had the chance to go into the real life solving the problems. It was not exactly the same.
Mm.
There are certain things which you needed to learn when you go to solve the practical life problems in construction industry. So
Mm.
certain job and doing at the site with the contractors was not basically adept at. I was trained in a different set of environment where you do the designing or more academic kind of thinking, then you apply it on paper rather than on the site. So eventually I had to make up my mind that probably this is not I have to do for next 5, 6 years.
Yeah.
So by default, I had to fall back on the thing which I did not like that much on software engineering. Fortunately, I got a job there. So I did that software engineering. However, those 4 years, I never liked the job. But in between, I was in contact with few of my college friends who were doing investing since their college days. So it was a very new field for me. I didn't have any clue. I was totally ignorant that what exactly is the investment and how do you do stock investments. So with the limited knowledge or limited exposure that I had at that point in time, I basically got into that space as a part of hobby, and I started with my limited savings doing the stock investments, as well as I was learning a little bit from here and there from the internet or limited sources
But
that I.
what attracted you towards investments back then? Was it like you wanted to make money or you wanted to learn the tricks of the trade?
So making money was a secondary thing, but what attracted me to that space was my characteristic, means my nature inherently. So I
Mhm.
don't have a capacity that much to do a thinking in limited amount of time or firefighting, you can say in short. So generally these jobs, software jobs require that kind of skills. And at the same time, it was not giving the full perspective what exactly the business was. We were
Mm.
doing software development,
Just that narrow piece of coding.
narrow piece of coding. So it was a narrow based view of job which I was
Mm-hmm.
concentrated in. So that's where I felt a difference that investment was basically giving you a larger bird eye view at a higher level. And it was also instigating a thinking process whether the decisions that you are making is really making sense and how long does it take to give you the rewards. So at that point in time, fortunately, that was the bull market from 2004 to 2007 or 8. And whatever decisions I was making, it was giving me results. So that part, as you said, was it a money-making business or money-making thing which attracted? That was a secondary part, but intellectually, that was more stimulating to me because of my nature and the job that I was doing.
So
Yeah.
then you started doing these investments and then how it moved along further.
Yeah. So when I was doing this investment, as it was a shallow water for me, but I knew there is a lot of depth in it,
Mm.
and I did not have that capacity to understand the business or the actual nuts and bolts that what exactly are the tools that you need to arrive at the investment decisions. So because I was ignorant and this ignorance led to a huge amount of curiosity that what exactly is going on. There was a stage when I was thinking that investment decisions are basically is a science. So you have a specific set of rules, set of formulas that if you understand, you will be arriving at a decision to an accurate extent. So this led me to explore more, and I did my financial risk management certifications. I did my CFA, and I did a full-time course in financial engineering. So this was an eye-opener for me, and I wanted to have a structured learning. So it was a financial engineering course which basically used your knowledge of mathematics as well as finance both together. It comes out with some specific things which you'll be able to use on a day-to-day basis, and those are mostly a quantitative kind of outcomes. So my understanding, as I said, that I thought that it was a science investing, but it didn't turn out to be as such, which I discovered during my structured learning. But at the same time, trading was such a thing which was more of a quantitative in nature, as well as it had specific elements of science attached to it, apart from the behavioral science or the financial side of it.
It's a culmination of everything that you've learned
Yes,
from your
exactly.
engineering to your job experience in India.
So I took the job, came here in Singapore, but I always had in back of mind that this is not the thing which I want to pursue in future.
Mm.
I wanted to get into the specifically trading desk. So that time was 2010. The market was not that good because of GFC. And after having tried for around 1.5 years, I didn't get any specific job which was of my
Mm.
liking on a trading desk. So I continued in the same company where I was working. And at the same time, I started pursuing my hobby of doing actual trading on a serious note. So that was a life-changing thing for me. So since then, I have been trading since 2011 or 12, and mostly on derivatives. So whatever I have studied, I have put that into application.
Okay. But was it your
So
own capital or you already started raising capital back then when?
no, of course, that was my own capital because I had not tested or
Yeah.
done any testing to raise capital from others.
So when you finally decided to hang your corporate boots and go full-fledged into this thing?
This decision I had made around 2019 or 20.
Okay.
And that was the point where I had already traded in India markets for around
Mm.
7 to 8 years. And I was just venturing into US market.
Okay.
And when I ventured into US market, it was more conducive for my kind of strategy that I was deploying in India markets. It
Okay.
also started giving me consistent results. So at that point in time, I felt that, okay, if I have tested the India markets, I have tested my US market, I should be able to generate my livelihood through my own personal saving if I keep on trading. So that is the point where I thought that I have to quit, but it took around 2 years before taking out the plug.
It was getting difficult for you to manage time-wise, but it's just that you thought that now you are in a comfortable spot to call
No,
it quits.
time wise, it was very challenging because at that point in time, I had full-time job. I was
Day
doing
job.
trading in India markets, trading in US markets overnight.
So you
So
were
it
like
was
working round the clock.
right. And of course, family, if you have kids at home, that is also demanding.
Yeah.
So that was the time where I had to slog a little bit without
Mm,
having proper sleep.
right, right.
Yes.
So what was the reaction of your family when you broke this news to them?
So family wise, I think it's been 5 years since I was in the process of setting the expectation.
Ah,
So
okay.
family knew that probably I will be in such a position.
Right.
But of course, when you take such decisions and when you are preparing someone for such decisions, there is a difference. When
Mm-hmm.
lightning really strikes and you're preparing for the lightning, there is a difference.
Yeah.
However, from my side, I was pretty confident that I should be at least able to earn
Yeah.
so that livelihood can be maintained to a similar level, if not more or less. So
Yeah.
that part, if you are yourself are confident, then probably you are in better
Yes.
position to convince somebody else.
So you never had like even a inkling of doubt that if this will not work, I'll come back to corporate, or you were like, this is it. What was going on in your mind?
So, see, I had traded for around 10 years by the time I had quit. So there was a not
Mm,
single year loss that I had made. I'm not sure whether but I should say to be overconfident. I was at least confident that I'll not make a loss.
Right.
in worst of times, because I had seen many economic cycles in these
Mhm.
10 years. So from my side, it was very confident, but at the same time, self-doubt is always there,
Yeah.
because the market regimes changes means you are never confident that market will be the same as they have treated you in past. But if
Yeah.
you have solid fundamental strategy that you have been deploying in all economic market cycles in a quantitative manner,
Right.
probably
Right.
that will give you some hiccups here and there. If you stick with it for a little longer period of time, probably you'll be able to get out of those hiccups. So that's what
Right.
was the propelling drive that I had. But yes, I was very sure that if it doesn't succeed, then can I go back to job? Today also, if you ask me, I would never ever take that decision to go back to job. That's my personal preference, but I don't know economically what will happen in future.
Yeah. All right. So you said that you started raising capital from your first network, but then how did you land your first clients per se who were not your first degree of connections? Did you have to do any kind of marketing?
See, actually, I was trading and I said that it was a very consistent track record. So I never went to an extent that I will approach somebody whom I totally don't know.
Hmm.
So till the point in time, whoever are associated with my investment thesis, they are either my direct contacts or
Okay.
mostly they are contacts of my friend's friend. So the second level of familiarity is there. Probably
Okay.
third level of familiarity, slowly it's developing,
Okay.
but I have never gone into that approach that I'll approach to someone whom I totally don't know. So either they are through alumni contact or my friend's contact. And what happens is if you are able to convince your idea, whatever you are doing,
Hmm.
probably it will take hardly one meeting to somebody assess that whether you are doing something correct. And if you have, of course, the track record should speak a lot about you. So if you are able to communicate and your track record are both aligned,
Hmm.
usually people are there to give you money, means you don't have to approach people and sell yourself.
Right.
So that's what I feel personally.
So are you saying that as a fund manager now, you don't essentially need sales skills as long as your results and returns speaks for itself, then it can compensate those sales skills that you might not have. Am I correct in my understanding?
Yeah, so the later part that you said, both are correct, means you need to have sales skill, but if you have capital, you can hire people who can do sales for you. So if you want to make your fund large enough,
Hmm.
where you want to have a large AUM under you, then
Hmm.
probably those kind of skills are very much required. I don't deny
Hmm.
that. But if you want to have decent size around 15, $20 million,
Hmm.
that kind of AUM, if you are comfortable with, probably you don't need that kind of skill of sales skills. But if you want to go around 50 million, $100 million,
Hmm.
then you need that kind of skill, and you need to have proper team who can um, do the client approachment for you.
Got it. Got it. Yeah. And I'm sure, I mean, you spoke about your IIT alumni network. I'm sure that itself is strong enough and you must be having some credibility and social capital there land you those initial clients.
Right. So it comes handy in these kind of network. But
Yeah.
if
Yeah.
you are unable to provide something which is substantially interesting, then that doesn't work, because it should
Yeah.
be
That.
mutually
Yeah. 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 That's like a very basic human nature. Like, what's in it for me? As long as you can show them.
right.
Right. Okay. I want to touch upon a little bit about your lifestyle. So now you are a stay at home dad who is also managing a multi-million dollar fund. So how do your kids perceive you? Like, do they ever ask you, Dad, what are you doing at home? What is it?
Kids do like, so there is no second view in it. So they have somebody at home to take care of them. That's what they want, security and somebody to do all their work. So that kind of assurance which kids get is unparalleled. Means you cannot do that with your job.
Mm-hmm.
But yeah, from my personal side, it's more fulfilling for me compared to the kids. Kids can anyway have their fun, even with the dad is not there.
Yeah,
And
true.
so we enjoy each other's company.
Interesting. But also, like with this flexibility and financial freedom you have now, how do you see your life has changed, how you spend your money, or general like flexibility on a day-to-day basis?
Day-to-day basis, it has significantly changed because now I have ample amount of time.
Mm.
So if a human has an ample amount of time, probably he will be able to devote his time in something that he wants to pursue, not from a pressing point of view, but from his interest point of view.
Mm.
So now I have a little bit of flexibility where I can devote my time in something which I like, and it's not in a time-bound manner, which generally
Mm.
happens when you are in a job. So,
Okay.
so this is about the daily life, but financially nothing has changed. The thing is that I have independence to go on leave whenever I want to, and I can sleep at whatever time I want. I can wake up at whatever time. I can read what I wished to.
Mhm.
So these are some of the luxuries that you get. And I believe that you don't need much of things in life as
Mm.
long as you are able to give ample amount of time. So time is the crunch.
True, true,
So I have
true.
been able to master that because of this independence.
Amazing. Yeah, I mean, rightly said, time is the biggest wealth that you can earn, especially in today's times. So I
Right.
want to ask you that, you are handling other people's money. Does it scare you, or how do you handle the pressure and responsibility of dealing with other people's hard-earned money?
Yeah, so naturally, if you ask anybody, trading is a very stressful job, and managing other people's is 5 times much harder compared to your own money. It becomes even more stressful when you have given them a track record which was based on a limited amount of money that you have managed, and you
Mm.
are trying to replicate the same strategy on a larger scale of money. So, uh, 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 an element of expectation comes in where you have to create the similar kind of record which you have generated in past. So it doesn't come naturally, but over a
Right.
period of time, when you start doing it slowly, then probably you get into that kind of groove. That's how I see that when I was raising capital around 2, 3 years back, probably it was more taxing for me because I always had a more self-doubt that
Mm.
if I'll be able to come to the investor's expectation.
Right.
But now it's more ingrained
Okay.
kind of thing.
Okay. So, like, what now that you're operating as a fund manager, and you did speak about some of the qualities and traits that inherently supported you in taking your career trajectory towards this side. But what personal qualities or traits or skills you believe have been crucial to your success that you have achieved thus far?
See, when you trade, the most important thing is for success that you should ideally love it. Means you need to have the passion for it.
Mm.
So that is the first thing, but then you need
Mhm.
to have the other things which support this passion. So generally in trading, what exactly happens is that emotionally you need to be very solid because the market will test you every other day. Every other day it will challenge you. So
Mm.
you need to have hope that, okay, you will be able to do well the next day. What backs this hope is that you need to have a solid strategy. When I say solid strategy, it doesn't mean that you have a magic wand that you can generate money out of thin air, but
Mm.
that trading strategy should intuitively make sense. So there are only two factors which goes into market. One is the greed and the other is fear. And if you are able to control those greed and fear emotionally, and the hope only comes as long as you are solvent. Means if you don't blow out your positions, then there will be always a hope that you will be able to do better the next day. So that's where the risk management comes into picture, that how are you able to contain your losses? And containment of losses comes with your emotions, means how emotional are you getting with your positions. So one thing which I have learned is that you don't get emotional with your positions that you have taken. It doesn't come automatically. Human brain doesn't work that way, that you to switch on, switch off. But it comes with the risk management processes that you have placed in, and the hope that you have that, okay, if I am able to contain the losses, probably I'll be able to not only recover these losses but also make profit the next day. So this is the hope, and the risk management is what gives you the emotional backup that one needs to have.
So this emotional neutrality comes naturally to you, or you do something to kind of enhance it or work on it?
No, it doesn't come naturally to me. I am also a very risk-averse person as well. I can't see losses. Means when you have red on the screen, anybody it will shake his confidence. But as long as I said that you have those two combination
Mm,
that you have hope for future and you can contain the losses
mm.
and don't get tied to a specific position that you have taken. Probably it will work
Right.
out over a longer period of time.
Okay. So just to break the rhythm of the conversation, I'll say three statements and then you can give me a brief answer on what do you think about it. And I got
Okay.
gathered it all from the internet. So statement number one is that fund managers have an insatiable appetite to ask questions about anything and everything.
Yeah, you should have a capacity to question not everything or anything, uh, but yes, whatever trading strategy that you have, you may
Mm,
think that it is working nicely, that you are making money and you are genius, but this should not take you to the different level where you get ecstatic about it. So emotionally, you should be grounded, and you should be able to ask the question that in which particular scenario your trading strategy may fail. To give you an example, as I said that the US market was more conducive to my strategy. I was making consistent amount of high returns for last 5.5 years, but it didn't work out in last 4 months. In the sense we were mostly flat. I didn't make loss, but the market regime has changed. So you should be able to understand that okay, if things have changed, what are the ways out that you can take out of it, and what is the learning that you get out of it? Because market regime has changed and it has changed dramatically over last 3.5 or 4 months. So there are ways where you can question yourself that what exactly is going wrong and come out of it and devise some strategy which will work in such kind of market regimes. So you should be open to question your strategy because nothing can work indefinitely the same thing over and over again.
okay. And then my next statement is that a fund manager must have a strong ability to control their emotions, both good and bad. I know you touched upon it, but any other thing that you would like to add?
Yeah, so you should be able to contain your emotions, good or bad. I believe that I draw a parallel with if you're playing sports, there are times when you grind and you are not winning. So similar kind of characteristics is drawn parallel into trading. Means if you are grinding and if you are losing, if you are not making money, that's not a bad thing. Means as long as you are confident about your positions or your investment thesis, probably there will be time when it will turn around. So that's when your emotions or your grit feeling comes into picture. So I was reading somewhere that somebody has created an index on CEOs who are very good at sports or boxing, and those companies have done very well. Means they have generated around 140% of return in excess return compared to S&P 500. So somewhere that sports parallel comes into picture where it helps you to grind during bad times and see and remain emotionally stable.
True, true. Okay. And then my third and the last statement is that a fund manager must have strength to hold an unpopular view and sometimes for an extended period of time.
Yes, this is very valid. So if you are going with the crowd, probably you will have very less probability to make money if you are able to go against the crowd. But it's a vast area, right? Means when I say that going against the crowd, you need to have a solid understanding that why you are basically doing that.
Mm-hmm.
So going against the crowd, there is high risk reward ratio in that, and if it turns out well for you, then you will make a lot of money out of it. But going against the crowd is little difficult, but it's not difficult as long as you are able to understand the thesis underneath around it, why you are doing so.
Right. But you need
That's
to have a very solid anchor to hold on to that
yes, right.
unpopular opinion.
So I believe that it comes, and there is only one factor contributing to your success, and doing so is time.
Hmm.
So if you have been in the market over a longer period of time, probably
Hmm.
it's easier for you to take those decisions. Probably first or second time or third time, it's very difficult to go against the crowd and make
Hmm.
your own way out. But if
Hmm.
you have been curious and vigilant enough to see the market over a longer period of time, then probably it's easier for you to go against the crowd because you have seen those cycles in past.
Right, right. So you're saying it does come with bit of
Experience.
experience also and
Yeah,
exposure for a longer period of time. then
right,
you can draw parallels historically also and hold on to your instinct or gut.
right.
Okay. So my next section is a little bit about advisory. So for people who are aspiring to become financial independent, I know everybody tries to do it in their own little ways or big ways. But if you were to advise someone, what advice would you give to someone who is looking to achieve financial freedom?
See, financial freedom as such definition, what I understand is that if you have enough investment and it is able to generate a passive income for you without a
Mm,
pressing need for you to continue in something like a job, probably
mm,
that is what the financial independence is. So the new generation who are
mm,
around 35 years of age now, probably it's the right time for them when they have done a little bit of savings via their accruals from the job. So it's the right time for them to do a consistent investment over a period of time and systematic investment plan. If you are not very financially savvy, probably it is very much advisable that you keep on investing on a consistent basis, irrespective of the market conditions. So if you keep on doing for around 20 years as such,
mm,
then you, as early as you begin, maybe if you have started it around 22 years of age, by
mm.
40, 45 years, you will have enough capital to basically sustain yourself for next 20, 30 years. So
Right.
that's where the financial independence.
Yeah,
So,
I'm sure there are no shortcuts here, and you went through a very long grind and you
right.
studied financial engineering, you were doing investments on your own. But are there any resources that can help a novice also to kind of get started onto their journey of investment? Do you recommend anything that one must be familiar with, or one must read, or one must absorb to make those decisions?
So my journey was more of a structured way that
Yeah.
I had a full-time course, I did my certifications, I had my job. So that was an edge for me, but the other shorter way of doing it is it's not a shorter way, but it's more of a taking a risk. That
Mm,
see, if you have curiosity or intellectual capacity to understand the financial literature,
mm,
probably you can go to an extent where you read books, you read the literature, you read the materials, relevant, good materials on the internet. Don't watch the YouTube videos until unless it's from some authentic sources, some universities or professors are giving such, or some readers are giving such kind of
mm,
tenets. So that's how you can express yourself, but getting a knowledge about all these things is not totally gives you an edge in the market. It will give you a knowledge. That's
mm,
the only thing that you will have. But when you go into the market and start trading, probably that is only a very small part of it you will be using, and
mm,
most of the things will be you will be using from your hindsight or experience that you have gained while uh, getting this knowledge. But it will give you uh, uh, a way where you can uh, pull out these tools uh, from your knowledge and just in time when such kind of scenarios are there.
mm.
So as I said, there is no shortcut way. When you try playing with the markets over a period of time, you'll get more skilled, more skilled.
Let's say they are like great top five books. If you have any list that you would like to advise to our listeners.
The most important, or which basically affected me mostly, was from Ivan Sinclair, Volatility Trading.
Okay.
That is the book that I had a direct impact on my understanding. The
Oh,
second
okay.
was The Dynamic Hedging by Nicholas Taleb.
Okay.
So that is more of an advanced level of derivative pricing, that how the hedging is done, how the delta neutral pricing is done, and how the
Okay.
delta exposure is managed. So these are the two top-notch books in derivatives. If you want to trade in derivatives, then probably these are two. From technical analysis point of view, there is a book, Trading for Living by Alexander Elder. Yes. So
We will
there are
put the links
books.
of these books later on. You can
Yeah,
share with me.
sure. So there are other books is about the financial history,
Mm,
that how markets have behaved over a period of time.
mm,
Get to understand that how fear and greed have basically evolved, and this is very important. to have an understanding. The another book which I remembered is by famous mathematician called Mandelbrot. I don't remember his full name at this point in time. So Mandelbrot book was also very useful. Yeah, so these are a couple of books which I can recall at this point in time. But at the same time, you need to be well versed with what exactly is going in the economic space, in the economy as such. So if you are subscribing to good newspapers like Financial Times or Wall Street Journal, probably it will give you a better picture how the economy is evolving.
And I like what you said about knowing the financial history. As cliche that may sound, that history repeats itself. It's
Right.
important to know what happened in the past because, there are these cycles which keep coming. I don't know if you watch any YouTube videos or any financial advisors, but is there anything which caught your attention, which anything you can recall?
YouTube, I have never watched, but during my initial period of investment, I was seeing CNBC TV 18 in India, just to understand that what exactly is about. So now, in the hindsight, I think that it is total crap. Means,
I hope nobody from CNBC is watching this.
so I would advise that people don't watch these kind of stock tips that is generally given on such channels.
Okay. Interesting. All right. So, your closing thoughts. What's next for you and your fund? What are your plans, or do you want to expand, go big, or
See, currently we are into a fund which is trading only a single strategy. So this strategy has been doing well since we have launched the fund. However, what I understand is that each individual has his own specific risk reward. If you try to plot his risk reward tolerance, each individual will be a unique one. So what we generally do in finance, that we generally try to divide the risk tolerance into four different quadrants, like moderate, very risky, or conservative, or totally he doesn't want to take a risk. But these four quadrants are very broad, and you cannot straitjacket every individual into these four quadrants. So generally, if you are able to tailor some product which is able to cater to a specific, more granular kind of risk tolerance, then is more appealing to those kind of people. So I don't know what is the solution for it, but
AI? Don't know. Like to make it very tailored approach, but do you use any of the AI tools or in your day to day?
no, so I don't use AI because my trading strategy is not data intensive as such.
Okay.
Means I'm a mid-frequency trader, and my asset classes or the information that I need is only on a specific instrument. So I
Okay.
trade only on S&P 500. So I don't need a lot of data to churn and understand the thing
Okay.
and make decisions for me. So mostly my trading strategy is conventional in the sense that I use the derivative pricings, risk management tools to manage my position. So I'll not have opportunity to use those AI in my field.
Okay.
But
And so you were talking about, so how are you going to expand, or if at all that's on the roadmap for you?
yeah, so currently we are still a small firm. Means my fund is still small. So that first of all we need to scale it up to a larger extent, then only we can think of in venturing some other products. So I have in mind some other products which are not as trading intensive, but it is a slow-paced kind of trading frequency where you can still generate handsome amount of returns, but it will not require that kind of time devotion. Probably it will appeal to certain set of investors who are looking for those kind of products.
All right. Got it. Pranay, well, this was very interesting conversation for me to understand a little bit of world that you operate in because I didn't have much idea. Or I'm sure listeners who have some interest in this kind of financial related stuff, then I'm really hoping that they like this and they can gain something out of it. Before we exit, I just wanted to ask, how can our listeners get in touch with you?
LinkedIn is the best way.
Okay, we'll put your LinkedIn details in the description below. Any closing thoughts or anything that you would want to advise my listeners on something?
Closing thought, if somebody is trying to pursue this trading as a career, first of all, from my understanding, I believe that one who likes loneliness, probably they are more better traders compared to people who are more outgoing and speak to people, because it requires certain kind of involvement all 24 hours. Means something has to be going on in your mind. That how you basically manage your positions, how do you neutralize your positions, how do you cut down your positions, how do you generate return. So this is a constant process which nobody can help you. You are the only one, the best person who can judge
Mhm.
what exactly is going on. If you want to give an explanation to somebody else that why you have taken such positions, probably it's very difficult to explain.
Explain.
To an certain extent, people who are receptive enough, they may understand, but not everybody. So
Mm.
you should be in a position to live a life in solitude. So that is a very important thing.
Okay.
And the second thing is that you need to think the your trading style in probabilistic terms. It's not a binary thing. So when I say probabilistic terms, means you should be able to prepare that the position that you have taken is going to go in for loss, and what is your next step to mitigate those losses. So
Mhm.
kind of thinking has to come from within, that how do you see your positions in probabilistic terms. So uh,
Okay.
yeah,
So working in a lone wolf style is a must if you want to be a good trader.
from
Like you
my
need to
point
be
of
in
view,
that zone.
yes, from my point of view, yes. But there may
Okay.
be other views who people are very extrovert and
Right.
they can do multiple things at a time. Probably it's fine for them, so they can
Right.
think as well, do other stuff as well.
Well, thank you very much, Pranay. This was excellent conversation, and I learned a lot, and I hope the same for my listeners too. Thank you for your time.
Thanks, Sanstha, for having me on your show.